Hello and welcome to this Forex Preview at XM.com. I'm Maria Pachardis and joining me is investment analyst Mario Hadjikyriacos. We'll be discussing upcoming Canadian jobs data and the outlook for the Loonie. So Marios, although the Canadian economy did fairly well in 2019, despite global trade tensions, jobs data during the final weeks of the year started to fall short of expectations. Will the employment figures coming out on Friday give us some indication as to the direction of the economy?
I think they most certainly will. So, yes, you're absolutely correct. The Canadian economy was really the shining star, let's say, of the major economies over 2019. It was among the only ones that didn't cut rates because the economy was doing so well. But that whole narrative really came into question over the final weeks of the year. So we got a very, very soft employment report that was followed by some disappointing retail sales data, and combined, those flashed some warning signs, let's say, about the economy. So the upcoming data will probably settle this debate. So was this just a blip in an otherwise healthy trend, or were the latest data just the beginning of some sustained weakness?
I see. So taking all this into consideration, what's the outlook for the Loonie?
Well, I would argue that the risks surrounding the Loonie from the upcoming employment data are asymmetric. I believe that any disappointment in this data will probably trigger a much sharper downside reaction in the Loonie than the corresponding upside reaction in case we get strong data. And my argument is this: even though we've had this soft run of data lately, the markets still don't expect the Bank of Canada to cut rates over the coming months. So specifically, the probability for a rate cut by June is just 30% at the moment, which I believe is relatively low. What does that mean? If we get disappointing data, that whole narrative gets turned on its head. Suddenly everyone starts talking about the Bank of Canada actually cutting rates. The Bank of Canada itself might hint that. So we might see, sharp losses in the Loonie. Now, on the contrary, if we get decent data that merely reaffirms what the market thinks, the Bank of Canada will probably not cut rates, so we might get an upside reaction, but it won't be all that massive, in my opinion. Now, a final point is this. Before the employment data on Thursday today, we'll hear from the governor of the Bank of Canada, Poloz. The last time he spoke, he was quite optimistic about the economy, but that was before the data started to worsen, to deteriorate. So I think that there's a clear risk he might adopt a more dovish stance today, and if that is the case, that would also spell trouble for the Loonie.
Marius, thanks so much for joining me.
Thank you.
And thanks for watching at XM.com.